Hello, everybody. Recording live from somewhere.
Welcome to the Dental Efficiency Playbook. Here we go. Hey, party people. Welcome to the Dental Efficiency Playbook. My name's Gabe Hofmann, also known as the Dental Efficiency Guy. And do we have an episode for you tonight? It's a cruel world out there is the title of it. Maybe you can guess what that is referring to. Maybe not, but you're about to find out because I have an amazing guest for you tonight. Ken Kaufman, the CEO of Accrual. Ken, welcome to the Dental Efficiency Playbook. And please, can you tell us, introduce yourself, tell us a little bit about who you are and what you do.
Awesome. Great, Gabe. It's so great to be on your show. This is super exciting for me. I have been in the dental industry in some capacity, generally in dental finance for the last almost 25 years. And I've been the CFO of two large DSOs, 75 plus practices. And I now am running a company that my son and I co-founded together. And we focus on accrual accounting. And that's where the term, it's an accrual world out there, comes from.
Yeah, I love it. So what is, obviously with Accrual, it makes sense. Do you guys only do accrual accounting then?
No, we do lots of other things in the dental finance space. But we definitely, when we decided to build a company, we looked around and we just saw that dentistry in general dismisses and does not leverage the value that you can get when you use accrual accounting. And so we decided we would make that kind of the first thing that we talk about with people in the dental industry, because we feel very motivated to try to help everybody utilize that tool properly. But then beyond that, we do bookkeeping, we do financial planning and analysis and fractional CFO type help and work and all the other things.
All much needed services in any.
That's right. We don't.
Practice.
I will say this, Gabe. We do not do any tax. We have a partner that we refer all the tax work to. So a lot of our clients use that partner to handle all tax matters.
Okay. Yeah. And so let's dive into it. Thank you for that. I have a little bit of experience having worked in groups where we started on a cash basis and moved to accrual accounting for the benefits that my accountants shared with me back in our group. But with that said, can you talk a little bit about the pros and cons and what's the difference, cash basis versus accrual? Practical difference, and then the actual impact, right? What does that mean for the practice group or DSO when they make that change?
Yes, sure. So there's really two options when you're looking at how you're going to look at your financial information. The first one that is by far the most common in dentistry is cash basis. And what that is measuring and looking at is how much cash, let's say over a month period of time, how much cash was collected by the dental practice. This is a very common way for people to very simply and easily get a feel for what's coming in. The accrual does something a little bit different. Accrual focuses on work that's actually produced and completed. And that can make a big difference. For example, if you're the type of doctor that collects a decent amount of money from the patient before you actually deliver the service, it's actually really helpful to be on accrual, because accrual looks at that and says, hey, that it's not revenue, it's not cash coming in at this point, it's actually a liability because you've taken money from a patient and you have not delivered the service yet. So it's actually by far the most accurate And it's the most meaningful and helpful for running the business on a day-to-day basis than cash basis. And so that's why we put a big emphasis on accrual accounting. Cash basis isn't bad. It's not horrible, but there's a better way. And Gabe, outside of dentistry, everyone uses accrual accounting. It's the standard, but in dentistry, for some reason, we continue to kind of defer against it. And like I said, the whole mantra for starting our company, it was around, we've got to educate this market. And people who want to, sell their business at some point in time, you're going to get paid more if you're on accrual accounting than not. So there's enterprise value implications and a lot of other things that go with it.
Okay. Yeah, it makes sense. The thing that comes to mind for me is obviously collecting co-pays or co-insurance amounts and then charging something out and not having the balance collected based on an insurance claim that could be 30, 60, 90 days out. Right. And so that's accrued until that secondary payment comes in some cases. And
that's exactly right. We look at the timing of when the work actually gets done. And then the cash basis will look and see when you actually get paid.
Okay. Yeah. Makes a ton of sense. And where it always was interesting to me, full disclosure from an operations standpoint, is on like credits, debits, refunds, like those types of things, not with the production and the collections so much as the adjustments and so forth. But with that said, so what percentage, just curious, how much of your business is doing accrual accounting and how much is the other services? And then what is your typical avatar, Ken?
Yeah. So it's about half and half. And mostly because once you put accrual accounting in place, it's just part of the regular bookkeeping process. And so a lot of our clients stay with us and we help them continue on a monthly basis to continue to stay on that accrual basis and keep all that in place and the value that comes from it. And so it's about half accrual. And then the other half falls under others, sort of basic bookkeeping things all the way to doing fractional CFO type of work, helping, some DSOs grow, helping individual practices figure out how to grow or get set up the right way. We get our hands dirty in all of those kinds of things. And we love it. Work is so fun. And we get to help so many different great leaders in the dental space. It's awesome.
Oh, that's great.
Did that answer your question?
Yeah. Well, and I asked, do you have a standard size practice, number of doctors, number of offices, right? Group, like what is your typical client avatar?
Yeah. So the typical client usually is somewhere between 6 and 20 locations. Okay. With that being said, we do have lots of we do have a pretty decent amount of single offices, which is fine. We love working with them and helping them. But with the DSO experience that I've had, we do get heavily involved with various, larger groups. The largest one right now that we work with, I think, is just north of 40 locations.
Okay. So do you notice a big difference in the accrual accounting in, say, a small group, one busy office or 3 locations versus the larger groups?
Yeah, the larger groups are converting to accrual accounting at a much faster pace than the smaller. And there are a couple things that drive that, Gabe. The first one is, as a DSO grows and they start to professionalize and bring in like a professional COO, a professional CFO, and so on and so forth, a CFO that shows up and looks at dental and the dental industry, like the first thing they're going to do is convert everything to accrual because it is the gold standard, period. And so, and I think that, most growing DSOs, they're probably getting a fractional to a full-time CFO, probably somewhere in the 15 to 20 location range, sometimes a little bit lower. Like some of these, some fractional CFOs can be doing this at, the 5 or the 6 or the 8, location.
Sure. Yeah.
But
I
if it's a professionalized CFO on any level, the first thing they will do when they walk in is they will demand that everything get converted to accrual, because it's the gold standard for knowing how to run the business and make the right financial decisions.
Okay, so with this, it's an accrual. It's accrual world out there. Let's talk a little bit about the woes, like when you are not on accrual accounting. You said obviously you're getting greater value, but what are some of the challenges or the issues, either operationally or in inaccuracies at the end of the month or quarter or year end in cash basis, and then what does the transition look like for a practice or group?
Yeah. So this is gonna blow your mind a little bit here, Gabe. But one of the biggest issues with cash basis accounting is doctor pay.
Okay.
Most doctors are getting paid like a percentage of the production that they do, or some number like that.
Yeah. Normally the largest wage of the practice, right? The biggest
exactly.
Expense.
Exactly. And so when you're paying a doctor on cash basis, well, so now think about the problem that we've got. We're getting paid over multiple months. Like here's all the work they did this month, but all that stuff's getting spread out based on insurance and all of these different things over time. And so when you're on a cash basis, and your doctors are going to be frustrated. And so going to a net production or a net adjusted production number is usually the cleanest way to pay your doctors. But when you start to go to like net production, we're starting to move toward the accrual principles that allow us to actually pay the doctor for all the work that they did during that month. And get them paid on a timely basis rather than this trickling in of all these various things that are happening with insurance and everything else. So honestly, like doctor pay is one of the biggest challenges when it comes to accrual accounting. Okay,
that makes sense. So I guess the second part of that was what does it look like when hey, we've realized we have these challenges or we'd like to transition. What is the process of moving?
Yeah, that's a great question. So we have a two-step process to this. The first one is we will do the full conversion on a one-time basis. And so there's like an upfront, we're going to get everything set up correctly. And then we get everything set up so that on a monthly basis, we continue to move everything forward from a bookkeeping perspective to keep the accrual accounting in place and functioning and working on a monthly basis. So there's kind of the upfront, and it'll take sometimes, it really depends on our backlog. Like right now, we're kind of booked out till the middle of January. But depending on our backlog, we can get that done anywhere from within a half of a month to a month's time frame to get the one-time conversion done. And then it's just a bookkeeping on a monthly basis maintenance mode.
So Ken, the question that comes to mind is around the data. So when you're talking about that two-step process, how much of that initial process is analyzing, finding errors, correcting? I mean, I know from talking to practices and groups from a consulting standpoint, as well as looking at data, both financial data from the standpoint of implementing some automation in revenue cycle. I have seen how the data, when we are putting it in over an extended period of time, there's quite a few errors in the data. And then obviously the things that you mentioned relative to adjustments at a later time, not net production that we were paying. So how much of that is navigating the errors, identifying them, and putting a plan in place to correct those?
That is a big part of it, as well as we're looking at the use case, like how the practice management software has been used, because everybody seems to do it a little bit different or have some different philosophies around how to do it. And so what we have been doing slowly but surely, because we're on this mission with accrual accounting, is when we bring on a new client and they're on a PMS that we have not done a conversion on, we use that as our test case so that we can build out everything we're going to need to use that PMS in a future instance. And so we're kind of doing this dual track where we're getting everybody on accrual accounting, and we're also doing a lot of work around the data to make sure that everything gets converted clean and accurate and is usable. I'll give you one example, Gabe. We have a client that we started to do a conversion with, and then as we looked at the practice and what was happening, their deferred revenue was going up every month and getting bigger and bigger and bigger and bigger. And we said, hey, there's a problem here. Like what we've got to figure out, and we've got to get this under control because right now it's not under control. And when we looked at it, it's clear that they're not collecting all those funds up front. It's just there's a problem in the processing of the claims and how things are being put in the system.
So when you say deferred revenue that hasn't been reconciled yet with payment?
Deferred revenue is any collection, any money that you have collected from a patient, but you have not paid, or you have not completed the work for them yet.
Oh, okay. Gotcha. So credits kept getting larger and larger, but not completing the production or the actual treatment. Follow you. Yeah. So awesome. I guess, alternately, we were talking about the woes that you see, and this is all really good stuff. What are the big wins, right? How is accrual accounting going to make a practice or group more efficient?
Oh, good. That's a really good question.
Right.
When it comes to financial information and data, there are really two things that matter the most. The first thing is accuracy. And accrual accounting is the most accurate way to look at books, look at your financials, period. So accuracy is a big one. The second one is the information intellectually available enough that I can look at it and I can gain insight so that I can make improvements to the business moving forward. And so we're constantly inside of our organization, we're constantly going back and forth between driving things as accurately as they possibly can be, but also making sure that it's not, some PhD finance level that nobody can interpret and it's, written in Sanskrit or whatever. It's got to be obtainable intellectually so that they can make better decisions about building and growing their business.
Okay. No, and that makes complete sense. I know it's very difficult when reviewing numbers when you don't have that information, right? You're having to deduct and ask question upon question upon question, or pull from so many different sources. So obviously, when everything is in, either the practice management software and maybe a financial software that either integrates or doesn't, right? QuickBooks or whatever they choose to use, then it always seems to be easier to when they have been kept at least in one or two locations predominantly, as opposed to having so many different software options. But along those lines, many groups are acquiring practices today. So when they have 5, 10 plus PMS options, right? Because they acquire them and they haven't transitioned all of them to a single PMS. What do you guys do? How does that work?
Yeah, we have a group that is dealing with this challenge right now, and it mostly it always comes back to when an acquisition occurs, what was committed or promised, right? And so it's easy for me to say, okay, we now have all these practices and we've got 5 different PMS systems. We've got to consolidate them. That's easy for me to say. But if we promised them that we weren't going to change their PMS on them, then we've got to honor that. And we've got to figure out how do we organize our data in a way that we can pull from each one of those PMS systems and get what we need to be able to drive the right outcomes.
But you're able to do that.
Oh, yeah, absolutely. It just takes more time, more effort, but there's absolutely a solution to it. And Gabe, one thing I will mention too is when we put accrual accounting in place, we also stand up a data warehouse so that we can easily and quickly access all of the information we need to continue to keep, to get accrual in place the first time, and then to keep it running on a monthly basis. And it's a very light agent. It pulls it, once a day around midnight. And we do that so that it helps us just very, very quickly get things done for our clients.
So you don't have to necessarily stay connected to the locations if the data is being extracted and provided to you, correct? So
that's right. And we're not writing back to the systems or anything. This is just a mechanism to make sure we're getting the right data so that we can be accurate with everything.
So then do you take the data, you put it on, besides spreadsheets, P&Ls, financial analyses, and then kick that back, and is that monthly? Is that weekly? Is that quarterly? Or does that vary by group?
No, for all of our clients, we produce financial statements on a monthly basis. That's the gold standard. We generally are closed, and financials and management reporting is all issued by the middle of the month, no later than the 15th of the month, following the prior.
Okay. So then obviously team meetings to review financial performance 15th or later. I was thinking, I've always been operations, right? Yep. So my mind is on having the data and being able to, make operations decisions and or training from what we're seeing, right? Put in processes.
So critical.
Or make decisions on that data. That's great. So Ken, I always like to, this is the time in an episode where I ask a question. What is one of the craziest things that you have seen in accounting, right? And you don't have to say specifically who, but just kind of, is there a story that stands out or a situation that stands out in your mind of, something that occurred that you're like, you can share that will allow others to not necessarily make that same mistake?
Yeah. So this was probably 3 or 4 years ago, Gabe. I was at a DEO conference and speaking and talking about finances and those things. And I asked a question and I was floored with the answer. I asked all of the participants there, how many of you are getting your financial statements issued to you by your CPA or accounting firm or whatever? How many of you are getting those by the middle of the month? Raise your hand. Not a single hand out of probably 100 people, not a single hand went up. And I then said, all right, I want everybody to pull out your cell phone right now. I want you to call your CPA or your tax person or whoever it is. We're going to call them right now and tell them you need to start getting your financials by the middle of the month, or you're leaving them and you're going to go find somebody else that will actually get you your information and this is a whole half of a month after the end of the month. Like, this isn't, like, they've had plenty of time to do it. And so I feel like in dental, with the way that accrual accounting is kind of dismissed and everything else, I really think that most providers are underserving the customer, which is the single practice owner or the DSO or whoever and whatever it is. But that was like one of the big eye-opening things for me, that it kind of rocked my world a little bit, to be honest.
Yeah, it's pretty shocking, and it surprises me. You are at an event like that where they are, constantly working on their practices and learning how to grow the business. And if you don't have that data, if it's the end of the month by the time you get it, you're 30 plus days in arrears, right? You're making decisions on old data. You need that data to be able to make an impact as close to real time as possible.
Yep.
I in operations, I'm always suggesting, if I work with a coaching office, I'm looking at the metrics or the KPIs that they have for the real time. Again, I know it's not final, it's not accurate, but it's operational data, day to day, month to date, year to date. And then obviously the P&L is what we use for financial data, as well as some reporting out of the PMS.
The other thing, Gabe, I'll throw out there, this is something also that I think hopefully will be just a help for your listeners. There are 3 financial statements that come. There's an income statement, a balance sheet, and a statement of cash flow.
Okay.
If you told me I could only have one, I would always ask for the statement of cash flow. And then I would do one thing with that statement of cash flow. And by the way, if you're not on accrual accounting, you don't have a statement of cash flow because there's no way to do it. There's no way to calculate it because it all flows through the income statement and not through where it should be, which is the statement of cash flow. But that being said, there's one financial metric that matters above all others. And it is called
cash flow.
It is free cash flow. And free cash flow is you look at your cash that you generated during the month or you burned. You look at that number for the month, and then you subtract all of your CapEx that you spent during the month. And if the resulting number is positive, it means you are a business that's generating cash. If it's negative, it means you were a business that last month burned through cash. That one number, if I could only look at one financial metric every month, it would be that one, because a business that is generating cash is liquid gold. A business that is consuming cash is on its way to the grave. And so that's my number one metric.
Well, and ladies and gentlemen, that applies to life as well. If expenses are greater than the revenue, then the incoming, and there's no cash left over, then debt is being accrued on a monthly basis, and there is a limited time to that business. There is a burn rate.
That's right.
So, I was laughing because I'm like, yes, that applies to all financials everywhere. Cash is king. If it's in the negative at the end of the month, that can only occur for so long. And I know that again, as the dental efficiency guy, we often will meet doctors when they are in a situation where they're driving top line, but they are not necessarily. It's not translating to the bottom line. And so, in that case, many times expenditures are too high, or revenue is not high enough, or the expenses that we have, there are greater options. It varies quite a bit from office to office, right? No two offices, no two groups, no two DSOs are exactly the same. But with that said, that is becoming something that I see more frequently today, because expenses have increased to where a practice or group is great at driving the top line, but margins are shrinking on a monthly basis. So I'm curious, Ken, when you guys are working in accrual accounting with a client, do you give advice and coaching, any discussion around what you're seeing, trends in the business? Obviously, you were a DSO operator for all those years, so I'm kind of curious if you share any of that type of insight with clients when you're working with them.
We absolutely do. We have a list of both lagging and leading indicators. And it goes all the way through overhead and supplies and everything else. And I actually, Gabe, we're probably going to publish that. I think we're going to publish that in 2026, just to get the information out so people kind of know where some of the key benchmarks need to be and the targets they need to be shooting for. All the way from like margin to supply cost and overhead and everything else.
So is that a new book coming?
That one won't be a book. That one will probably just be like a worksheet that we share in the
Gotcha.
marketplace.
I didn't know. Didn't know if there was a plug that needed to go out on a book that's coming out. But that's great.
You're right though. You're right. We do have a book that's in process, but that's gonna probably be middle of next year before we get that done.
Okay. Awesome. So Ken, that brings us to the end of this episode. So before we close, it's been awesome talking to you about it's a cruel world out there. And if there's one thing that you want to leave our listeners with, what would that be?
I think the main thing is get yourself the opportunity to really understand and learn about the financial side of the dental business. I've never met a doctor that's dumb. I've never met a dental assistant who doesn't know what they're doing, that hasn't been trained and whatever else. I think that doctors and those that are leading in dental organizations are sometimes at a disadvantage because perhaps they didn't take a finance class or learn about how accounting works and some of the accrual and how these things work and how they all work together. I would advise, or I'd love to just challenge everybody to, because I see a lot of abdication in this area where people say, "Oh, my CPA does that for me," but they have no context in terms of how to look at a P&L, how to understand a balance sheet, and those sorts of things. And I would really encourage you. There are, courses. Sorry, I just got stuck on the word of where. You can earn all of your CE credits. That's what I was going for. But you can, there are classes you can go to in CE that you can take that will help train you. And then also whoever your accountant is or your bookkeeper or your CPA or whatever, ask them to train you. Ask them to tell you how the financial statement works and why it works and how they should be using it, and those kinds of things. I think that it's a very underutilized asset that can really go a long way with empowering leaders and practice owners and DSO leaders. There's a lot of opportunity, and I think there's a lot being left on the table right now because the dental industry lacks in financial education.
Two really, really, really important points that I want to reiterate. So thank you. One, if you can't measure it, you cannot manage it effectively. Meaning that if you do not know how to read or understand your financials and your team doesn't understand financials in the practice, make that a number one for 2026 or the end of the year, right at the end of December, that you're going to make a point to reviewing at least December numbers in early January, because the more that you teach them, the more that you know, the more empowered you are to make accurate decisions and to lead your business. Secondly, I agree 100% on there are CEs for accounting, but if you have an accountant or a CPA that doesn't provide you education, insight into what they are seeing, offer you help, assistance from a financial standpoint in making decisions in your business, right? Is the cash flow there? How are the numbers? What are the trends in the business that we're seeing right now? If you're not getting any of that, I would challenge who you're working with or question, because that's really important. that's so helpful to have on a, weekly, monthly, quarterly, annual basis. So it shouldn't be just twice a year or at tax time that you speak with your accountant. You should be getting this. It's almost like it's financial coaching, it's financial education with the vendor that you work with that's handling your financials. Ken, if someone wants to ask you a question, someone wants to get a hold of you, or they're interested in your service, what's the best way for them to get a hold of you?
Yeah, sure. So email and LinkedIn. So my email address is ken@accrudent.com. Or you can just look me up, Ken Kaufman, on LinkedIn. I'm pretty active there, and happy to connect. And just if you want to chat, if you've got questions, happy to answer them. No pressure. Again, I've been in this industry a long time. I've invested a lot to be here, and to continue to be here now for almost 25 years. And I love it here, and I love meeting new people all the time. So I'm happy to connect with whoever.
It's been an absolute pleasure having you on the Dental Efficiency Playbook. For all our listeners, you can always comment on the episode. Please don't forget to like and subscribe for more future episodes, great episodes. And if you do make a comment or ask a question, I will make sure that gets to Ken as well. Our team will filter that data to him, or you can always reach out to me and I can connect you as well. Again, Ken, thank you so much. Many, many, many gems, takeaways from this episode that I think people can benefit from. So it's been a pleasure having you. And for all our listeners, we'll catch you on the next episode of the Dental Efficiency Playbook.
Hey, friends. Before you head out, I just want to say thank you. Seriously, there are a lot of places you can spend your time. And the fact that you're here with us, investing and getting better, building smarter systems, and elevating your practice, that matters to us. If today's episode brought you value, please do us a quick favor and like and subscribe, and share it with someone on your team who's ready to level up alongside you. That's how we keep raising the bar, that standard across dentistry, together. And if you're ready to take what you learned and actually implement it in your practice, head down to the show notes and connect with us through the link below. We'd love to help you streamline, grow, and create a practice that runs with greater efficiency and a whole lot more ease. Until then, keep focused on 1% better each day and enjoy the ride. We'll catch you on the next episode of the Dental Efficiency Playbook.